Good afternoon, everyone, and welcome to the Vantage Markets Australia, the Monday Open, brought to you by the Vantage Private Client Team. That's me, Jeff, in Sydney. You can see the weather in the background, and Mark in Melbourne. G'day, Mark.
How you going, everyone?
So we've done a few of these now, so you should understand the agenda. We're going to go through what were the big market movers last week. We'll talk a little bit about what we're expecting to be the big market events this week. We'll talk a little bit about technical analysis, and we'll do some Q&As at the end. So last week we had that big fall in the Chinese share market on Monday, Mark. That was after a week-long holiday for Golden Week. I'd love a Golden Week.
Yeah, it was a crazy day.
I think we fell 14.5 or 15% on the day. That was after a little bit of disappointment with their stimulus. Do you recall what happened with that one?
Yeah, I was reading about it over the weekend. There was an article in the Financial Times. So they actually came out with more stimulus over the weekend, but they failed to give any data. So investors were sort of quite concerned. We also had CPI data and PPI data out of China, which both were below forecast, which caused some concerns over deflation. So yeah, it's interesting times at the moment. Yeah.
Well, considering China's the world's biggest consumer at the moment, it's going to be interesting if they go into a deflationary spiral. By interesting, I don't mean in a good way. So we also had the Reserve Bank of New Zealand cut interest rates as well last week. They cut 50 basis points as was broadly expected. The RBNZ is pretty good at signalling to the market what they're going to do before they do it, so you don't get the big moves in Kiwi assets and currencies as you do with others. They're very clear and very good at making sure that everyone really knows that they're what page they're on, and no surprises. That's kind of really where you want to be with a central bank, right? No surprises.
They're very transparent about it.
Well, the US started doing that about 10 or 15 years ago, but then all of a sudden, confusion reigned. I know that some of the big investment banks in the States, they hire people whose jobs it is just to go through Fed speeches and Fed statements to see if words have, like individual single words have changed. So they've probably just taken it a bit too far. The last big event we had last week was the US CPI number. What did you think of that one?
Yeah, I mean that didn't have much impact. It was slightly higher than expected, but the market didn't really react to it, to be honest, because I think the overarching theme at the moment is the Fed's going to start cutting rates. So, I mean, unless the data completely surprises markets, you might see some big moves. But at the moment, the markets are expecting the Fed to continue their rate cuts. Obviously, that'll evolve over time once the data starts getting released, and depending on what data it is. But yeah, we'll have to see how it plays out.
Well, I mean, they've just done 50 basis points last month. I don't think they're going to do nothing. You don't come out with a big swing and a big rate cut and then do nothing the month after. Plus, I think they don't meet in December, so they need to, if they've got any sort of concerns, they kind of need to do something. I think next month. I think next month we're going. Market's expecting what, like 83% a 25 basis point cut? Is it about 83%?
It's up to 86 now, so yeah, 86% chance.
Oh, there you go. Let's call 86 or 83% highly likely.
Yeah.
All right. So what have we got on the data calendar this week? Certainly nothing today. All of the big events are happening on Thursday. So we've got the Australian unemployment numbers. What's your read on the unemployment numbers here? I think they were much stronger than expected last month, right?
Yeah, they're expected to tick down. Unemployment's expected to remain the same, but yeah, the employment change is expected to tick down. So I mean, that might give the RBA sort of a reason to start cutting rates, but it's not enough. We need more data. What do you think?
As I said on AusBiz this last week and the prior time that I was on, I don't think the Reserve Bank of Australia is going to do anything this week, this year. So I think that's my expectation, is nothing at all this year.
Well, if you think about it, our interest rates, I mean, compared to the US and the UK, I mean, they're both on 5%. We're on 4.35. You got the euro on about 3.65. They're going to cut soon, so we're not the highest compared to other central banks. So I mean, yeah, they might just take their time with it.
Well, the other one we've got is that our major trading partner, China, looks like it's slowing at best, if not moving into a recession itself. So, I mean, a good central banker would be worried about that in terms of what we're going to do with our interest rates. Then
Yeah, exactly.
Also on Thursday, we've got US retail sales data. What do we think is going to happen out of retail sales in the States?
That's expected to tick up by 0.3%. I mean, that indicates consumer spending, which could indicate potential uptick inflation, but I doubt it. I mean, like I said before, the overarching theme for the Fed at the moment is them starting to cut rates. So unless the data surprises markets, you won't sort of see a change in that theme.
Yeah, I tend to agree with you. I think we've got 25 basis points pretty much locked in. If the retail sales numbers come in significantly weaker than expected, we might get 50. But I think the people that are or the people out there that are still expecting 50 are few and far between at the moment. So that's the data calendar for the entire week. Did I miss anything, or is that pretty much everything in those 3 bullet points?
Yeah, I mean, pretty much. I mean, we got like CPI data out of Canada, CPI data out of New Zealand, and the UK as well. So that's going to be quite interesting. There's a it's actually expected to tick up for New Zealand, 0.7% quarter on quarter. So I mean, if that does happen or higher than that, I mean, they might sort of just pause instead of keep cutting. So yeah, it just depends on the data. I mean, as this all sort of evolves, the data is going to come out. The central banks are going to change their mind, slow the pace, quicken the pace. So it's hard to say. Yeah, and that's about it for this week, Jeff. Yeah, it looks like we've covered it all.
Yeah, I think it's a pretty quiet sort of market week, especially if the CPI and the US retail sales numbers come in as expected. I think it's going to be a quiet week here this week.
Yeah, I agree.
Moving along to technical analysis, Mark, what have we got here?
All right, so we have the pound USD daily chart here. So as you can see, prices have made a higher low, higher high, higher low, higher high, up until the point where we reached a high of 134.34. So what that indicates there is it is an uptrend. So we're clearly seeing, like I said, higher lows, higher highs. That's a clear indication of an uptrend. Current price at the moment is above the 100-day EMA. And it's actually at an interesting point at the moment because if it does break that support level there at 130.44, 130, the uptrend is actually breached. So yeah, I mean it's interesting at the moment. It's just sitting on that support level there.
Oh, all I've got to add on sterling is that every time I've ever traded, I've lost money. So I'm going to leave that one
Yeah.
alone. All right, we had some
What was that? Sorry,
internet
Jeff?
issues there. I just said every
What was
time I've ever traded sterling, I've lost money, like literally every single time. So I don't trade sterling.
yeah. Yeah, if it does breach that support level, the next one we're looking at is 1.2890 and 1.28. So it's about a 90 pip range there. Also, what's interesting as well is we're in oversold territory there on the RSI. So we're below 30. I've indicated there on the RSI. So what's going to be crucial for this is the CPI data released midweek. So if that ticks up, you could probably expect this to strengthen.
All right, good. Excellent. What's next?
And the next one is so it looks like it's gold on the 4-hour chart. So as you can see on the chart there, I've shown the consolidation phase it's made from about mid-August or about mid-September. As you can see, price just bouncing around in there, and then it broke out. made a high of 26.85 and then consolidated. We recently did break out of that triangle, as you can see there, but it's just come back up and retested the upper range of that triangle there at 26.61. So that was on the back of the PPI data out of the US on Friday. So we had it was lower than expected. So that did give gold a bit of a rally there, but it is struggling at the moment at those levels. Yeah, it'll be interesting. I mean, because that is actually quite significant level there on the 4-hour chart as well. I mean, it has touched it quite a few times.
All right, good.
Anyways, we'll yeah. What do you think, Jeff?
So I always look at gold from a fundamental perspective, and what I saw this morning was a Reuters article saying that the US was sending some troops to Israel. That's never really been a good sign for what's going on in the Middle East. I think if that Middle East escalation or does escalate a little bit, gold would have to continue to rise from here, right? A friend of mine, Michael Berman, who writes the Signal to Noise report, um, was quoted saying early this afternoon that gold still has a long way to go on the upside if it does break higher.
Yeah, I mean those geopolitical tensions is definitely giving gold some some buying pressure, and even if we do get a stronger dollar, the geopolitical tensions, going to give is going to make gold, I mean, go higher. So because investors tend to put their money in safe haven assets, and gold is considered a safe haven asset.
Yeah, as it should be. What's next? Do you think?
Okay, so yeah, next chart here we have euro yen.
Mm-hmm.
We have the daily chart there. So with this one, you can see it's made a high in like about a month ago, roughly. Actually, sorry, it looks like in about mid July, it made a high of 175.42. So at that time, that's when the central banks decided to start cutting rates. And one of the biggest fundamental drivers of currency pairs is actually interest rate discrepancies. So, yen having a low interest rate of about 0.25%. At that time, the euro was at around 4 point something percent. So as they started cutting rates, you can see the price significantly dropped there. That's because the discrepancies between the interest rates are actually getting smaller. So yeah, you can see the markets. There was a heavy sell off there. That's all the way from 175.42 to 154.41. So it's a big drop there. Anyways, ever since then, it's been just ranging within that range. The upper range being 163.89, lower range being 154.41. So you've seen the price supported there a couple of times, and it's at the moment it's at that resistance level, also below the sorry, not below, actually touching the like the 100 EMA European. What do you think, Jeff?
You know what? It's funny. I don't really normally look at the euro yen because on a daily or an hourly chart, it never looks like it moves. But when you look at it on the daily chart, it actually looks like it might be worth looking at.
Yeah, I mean, like what can traders do is they can look at the daily chart as sort of like a bird's eye view of where it might go, and then you sort of dial it down to like the 4-hour hourly chart to get a more aggressive entry. So the daily chart can be quite slow for some people, but it can be used as I guess like a sort of like a gauge of where price may go in the next coming weeks or days even.
Yep, fair enough. All right. Well, look, I'm getting the hurry up here, so why don't we move over to the questions that we had from our
Sure.
clients this week? Let me run through quickly the first one, which is why did the dollar not move very much after the higher than expected CPI? I think it was close enough to what expectations were to not change interest rate expectations anytime soon. Which follows on to question number 2. What will the Fed do at its November meeting? I'm in the camp of a 25 basis point cut. What do you reckon, Mark?
I agree with the money markets. They're 86% chance, and most of the time they're right. The Fed actually follows that, anyways. Yeah.
Oh, I wouldn't say that. All right.
I
Well, to
mean, like
wrap up,
it's usually correct. Yeah. Anyway.
all right. Well, look, to wrap up, just if you have enjoyed watching this, it'll be made available on the within our VIP chat room that we have within the client portal of our website. Everyone has access to that and to this, and you can watch it as many times as you like. It's staffed by Mark and myself. We're in there logged in all day long. And we also have some outsourced analysts from Singapore called the Everest Fortune Group. They can answer questions and do a little bit of analysis as well. We also do our weekly technical video every Monday, so there's more content there for you guys to consume. And we have our private client daily update, which is emailed out every morning and is also added to the VIP trading room. That's a wrap up of what happened the night before in markets and what we're expecting in markets today. Mark and myself are the private client group here, and we're here as your direct point of contact. So anything that goes on with your account with Vantage, please don't hesitate to reach out to us directly. You'll have our contact details if you can't find them or you don't have them. Please do reach out to us through the VIP chat room. Anything else that you need, please reach out. We can help with deposits. We can help with withdrawals, getting them processed a little bit on the quicker side. Any of that sort of stuff. You can give us a buzz. You can send us an email. You've got all that contact details. So that's it for this week. Mark, see you later, mate.
See you all next week. Bye, Jeff.